Hey everyone, welcome back to The Explainer. Today, we are untangling two terms that honestly get thrown around interchangeably all the time, even by seasoned market watchers. I'm talking about trading and investing. To really wrap our heads around this, we're going to use a brilliant metaphor from our source material, the athlete and the architect. Here's a quick look at our roadmap for today. We'll start with the athlete and the architect, move into the active world of trading, then explore the long game of investing, weigh the risk and reward, and finally, figure out which path is yours.
Okay, let's dive right into section 1, the athlete and the architect.
You know, you'll often hear someone casually say they're investing in a stock that they fully plan to dump by Friday. Or maybe they're trading their 401k. But the reality is, these are totally distinct approaches. They have entirely unique strategies, goals, and risk profiles. You really can't successfully play both games at the exact same time with the exact same money. It just doesn't work.
Let's pivot to our first persona in section 2, the active world of trading.
So what exactly is trading? Well, fundamentally, it's the frequent buying and selling of financial instruments. But the absolute defining feature here is the singular goal, capturing short-term profits. A trader, our athlete in this metaphor, isn't buying a piece of a company because they believe in its 10-year vision. No, they're buying it because the price is moving right now.
Think about the sheer speed of these transactions for a second. A trader's time horizon is intensely short. A single trade can literally last for seconds, minutes, maybe days or months at most. Just like an athlete on a basketball court, they are making these rapid-fire, highly reactive decisions focused solely on the immediate plays happening right in front of them. To predict those rapid, chaotic price movements, the athlete relies heavily on a technical playbook. They aren't sitting around reading corporate mission statements. They're analyzing charts, recognizing patterns, and tracking momentum to execute highly specific strategies. We're talking about day trading, swing trading, scalping, and momentum trading.
Now, because of that intense speed, the athlete requires a very specific psychological makeup. Sure, deep market knowledge is important, but success absolutely hinges on strict discipline and high emotion control. When you're buying and selling in a matter of seconds, the volatility is enough to spike anyone's blood pressure. Without ironclad discipline, rapid-fire trading quickly devolves into fear-driven gambling.
But what if you don't want to stare at flashing charts every single day? That brings us to section 3, the long game of investing. On the complete flip side, investing is all about buying and holding assets for the long haul. This is our architect. Their goal isn't a quick, flashy flip. They aim to build wealth gradually through asset appreciation, compounding interest, and dividends. The architect is meticulously designing a structure that is meant to stand strong, totally regardless of what the daily market weather looks like. Notice the massive shift in the timeline here. We've completely zoomed out from seconds and minutes to years, half-decades, and even decades. Because of this extreme patience, investors make significantly fewer transactions. In fact, a great investor will often sit perfectly still through massive market corrections that would literally send a day trader scrambling for the exits. And since the architect's horizon is so incredibly long, their toolkit shifts to fundamental analysis. These are their building materials. They focus on intrinsic value. They're poring over financial statements, studying historical performance, tracking industry trends, and looking at macroeconomic factors. They're basically checking the foundation of the business to ensure it can actually survive and thrive over the next 20 years. And just as the trader has specific active plays, the investor uses deliberate, mostly passive strategies to build their portfolio. Whether that's growth investing for massive future expansion, value investing to find underpriced gems, income investing for steady cash flow, or just buying the whole market through indexing, these strategies are designed to unfold slowly over years. The mindset required here? It's a complete 180 from the trader. An investor absolutely needs strong analytical skills, but more than anything else, they need extreme patience and an unwavering long-term vision. Honestly, if you're doing it right, good investing should actually feel a little bit boring. You have to trust your initial blueprint and simply tune out all that daily noise.
Let's put these two head-to-head in section 4, weighing risk and reward.
When you compare them side by side, it's pretty striking. Trading is inherently high risk and high reward. It actively relies on volatility and often uses leverage to amplify those short-term gains. Investing, however, is a game of moderate risk and moderate reward. It aims for steady, consistent growth. Its secret weapon isn't leverage. It's the massive, undeniable structural advantage of compounding returns over decades. Now, because the athlete chooses to live in that high-risk environment, they have to actively manage it to survive. The source material outlines two absolutely vital rules for this: utilizing stop-loss orders to prevent catastrophic account-draining wipeouts, and rigorously managing position sizing so that one single bad trade doesn't sink the entire ship.
All right, bringing it all together now. Section 5. Which path is yours?
Think of this as your ultimate cheat sheet, summarizing these distinct mindsets. The trader operates in the short term, using technical strategy and rigid active discipline hour by hour. The investor thinks strictly long-term, relying on fundamental strategy and passive patience to ignore the noise year by year. Two totally different worlds.
The absolute most important takeaway here is that neither approach is inherently right or wrong. It's not a competition between the two. Trading is fantastic if you have the time, the advanced skill, and the iron stomach required to actively manage daily positions. Investing is perfect for a more passive approach to gradual wealth building. It all boils down to your personal goals, your risk tolerance, and how much time you actually want to commit.
So I'll leave you with this question to chew on. Take a good look at your own lifestyle and your daily schedule. Do you crave the fast-paced, highly disciplined, adrenaline-fueled action of the daily market? Or are you looking for the slow, steady, analytical build of long-term generational wealth? When it comes to your money, are you an athlete or are you an architect? Thanks so much for joining this explainer. Keep exploring, stay curious, and I'll catch you next time.